G'day everyone, welcome back to Pete's Investing. Today is June 18, 2023. This is the iron ore price update. On our weekly, we're in a neutral positioning on our indicator, but on the daily, we're broken up into a bullish momentum. And on the hourly, likewise, it's neutral. So just avoid, I prefer to trade when the weekly and the daily are aligned with the hourly. So when all timelines are aligned, that's when I take trades. Looking at the weekly first off, you can see here the CCI moving averages and the price chart moving averages aren't aligned fully, so it's giving us this neutral signal. We need to see both break above their moving averages to be more bullish, so just be mindful of that. I prefer to trade again when all timelines are aligned. On the daily, however, we've been primarily in a bullish momentum in the last couple of weeks. You can see there it's still rising with a nice bullish candle close of trading yesterday or end of the week. And it's approaching this descending diagonal resistance area. If I zoom out, you can see there there's a key support area which had bounced off at 657. We drew that some time ago along these bottoms, and also this key resistance at 902. So they're the key. That's a key band we're looking at, but also these two diagonal ascending and descending lines. So it may well fluctuate in that wedge in the near term in the coming weeks. So again, primarily long trades only on the daily, but again I prefer to wait till the weekly is broken to a long positioning as well. We did have this Fibonacci level and a divergence which played out well, this bearish divergence on the daily on the CCI versus a bullish divergence on the price chart. It broke below our band and we would have entered there, and that initial target would have been that first Fibonacci range. Always, again, to be conservative, I always choose the closest Fibonacci range as a target. In this case it went down as far as bounced off the 78% level, so it actually penetrated 1, 2, 3, 4 levels of Fibonacci. So just to minimize the risk and improve the probability, I prefer to take the first or even the second Fibonacci range as a target area. In this case it did all those 4 levels. So in terms of where we're going now, let me just draw another range on the daily. So from that low to that high, you can see there it's currently broken through the 50% and now approaching the 61%. So that's, as I always say, that's a key area to look out for. It may well bounce to the downside after it reaching close to this. Otherwise, if it punches through that decisively, then it may well go higher, and in this case it may actually rest upon this descending diagonal. So I'll keep a close eye on that and how far it goes above on these Fibonacci levels. On the hourly, we had a different divergence. These divergences on the different timelines are independent from each other, they're not related. So you can see there are bearish divergence on the CCI versus a bullish divergence on the price chart. It broke below our channel here, and that was our initial target area. As I said, I've put in 2 Fibonacci levels as a target area. I'm going to consider that a fail because you can see there if I zoom in, you can see there those wicks didn't quite penetrate below that 23% level, so I'm going to consider this a fail. However, notice here we've got a still a bearish CCI, so if I extend that, in fact I'll move that to a new, so you can see that if you extended that level from where it was, that's still bearish. And if I'm going to delete that channel, and I'm going to delete that Fibonacci as well. So if you draw it that way, you can see there it's actually fallen off from that high. You could argue that's still, either way, you can still argue that's still a bullish momentum on the price versus a bearish on the CCI. So let's just be consistent and draw that to that level. So you can see there closely that's still bullish and that's still bearish. So I'm going to delete that as well. So that's still in play. So in other words, we may see further declines in the price. And for that to work, then we need to draw a channel between that new area down to the lowest candle in that area, and then draw a Fibonacci retracement. Let's go back to this recent low to that current high, and our initial target area would probably be somewhere in that area. I'll give it 2 Fibonacci levels to penetrate, possibly. So if it breaks below this channel, that'll be our initial target area between the 38% and the 61% level. So that's our short-term target area on the hourly. Now, I prefer to use these as a potential price reversal. So if you're holding long positions on iron ore, that's where if this starts breaking to the downside, I probably close it out and take profits. If you're going long, you can trade these, but again, just depending on your risk strategy in terms of how you want to execute the trades. So to understand how to trade this and other trading strategies, subscribe to our Patreon page, where we also look at weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.